Ethereum's hard fork causes a price explosion as fees begin to burn. Crypto traders have been eagerly awaiting the upgrade, closely monitoring the deployment for any indications of how the changes may affect the rate of fresh Ether issuance. Ether's price surged in cryptocurrency markets following one of the largest upgrades to the Ethereum blockchain in the network's 6-year history. According to websites monitoring the blockchain, the upgrade, dubbed the London hard fork, occurred shortly after 12:30 Coordinated Universal Time, 8:30 a.m. ET, on Thursday. After then, Ether, ETH, the second largest cryptocurrency by market capitalization after Bitcoin, BTC, remained stable for an hour before surging. As of press time, Ether was trading around $2,780, up from around $2,600 just before the adjustments took effect, according to CoinDesk 20 data. Crypto traders had been eagerly awaiting the upgrade, closely monitoring the rollout for indications of how the modifications would affect the rate of fresh Ether issuance by the blockchain, a critical aspect in establishing the supply-demand balance. Additionally, analysts emphasized the possibility that anything would go wrong during the implementation of the new technology. Ether staged a strong climb in the weeks preceding the London hard fork, breaking out of a 2-month consolidation period compared to Bitcoin. The price of Ether has more than tripled this year, far surpassing Bitcoin's 31% gain. This reinforces the existing bullish trend and atmosphere in the Ethereum community, said Alexandra Laws, quantum economics analyst. Many cryptocurrency investors are focused on one aspect of the upgrade, called Ethereum Improvement Proposal, AIP 1559, which modifies the network's fee structure in such a way that a portion of the cryptocurrency's supply is burned or removed from circulation. The wager is that as a result of the move, the blockchain's net issuance of new cryptocurrency units will decelerate, ultimately assisting in establishing a floor beneath the price. Analysts at Stack Funds and elsewhere have drawn parallels between the London hard fork and implementation of EIP 1559 and the Bitcoin blockchain's every 4-year halvings, in the sense that significant changes in the cryptocurrency's supply growth are implemented at specific points in the blockchain's life cycle. Some speculators believe that Bitcoin's previous halving events aided in the rise of the underlying cryptocurrency's valuation. According to the website ultrasound.money, as of 15:06 UTC, around 585 ETH in fees has been destroyed, or roughly 43% of the block rewards granted after the Ethereum hard fork took effect at data block number 12,965,000. Furthermore, as Twitter user Eric.eth pointed out, at least one data block mined following the hard fork resulted in more fees being burned, 2.078 ETH, than new coin being generated, 2 ETH. However, like with previous Bitcoin halvings, it may be some time before the entire impact of Ethereum's London hard fork is apparent, thus any Ether price changes that occur may be delayed. Once the update is activated, a mechanism will be activated to burn a portion of the fees given to miners. While this component of EIP 1559 may assist support the price of Ether, it is viewed as controversial due to the possibility of reducing Ethereum miners' revenue. Until today, Ethereum's gas fee was determined by a free market. Users set aside a fixed amount of ETH for transaction processing, and the highest bidder receives priority. According to Compass Mining, miners' revenues will decline by 20% to 30% following the upgrade, as a portion of their fees will be burnt. Significant milestone. The Ethereum network has previously undergone several improvements, but this is arguably the most significant in the network's history. In 2016, the DAO hard fork occurred, which was a significant event since it altered the appearance and community of Ethereum. The December 2020 introduction of the ETH 2.0 beacon chain was also a significant event. While not a hard fork, it established a new version of Ethereum that would use proof of stake, POS. Between 2015 and 2019, the network received two significantly less obvious improvements dubbed Constantinople and Ice Age. In 2015, Ice Age developed the difficulty bomb, a technique embedded into Ethereum that gradually increases the difficulty of mining. Since then, the difficulty bomb has been frequently delayed. Indeed, one of London's EIPs delays the Ice Age until December 2021. In 2019, Constantinople included numerous suggestions to improve the blockchain's efficiency and pave the road for future Ethereum updates to switch to proof of stake. After this was executed, a severe issue was discovered in the code, and the developers were forced to submit a second hard fork to fix it, delaying the upgrade. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.